This is James Eng, and we're here with Mark Cantrell today to talk about property taxes. Mark, property taxes are a big line item for us multifamily investors out there. So, I want to bring you on. This seems to be COVID-19 season, but also property tax season. The National Apartment Association put this slide out about this video about how 14 cents of every dollar goes to property taxes. I think you sent me some information last night that in Texas, how much was it? Did you say?
Yeah, we think it's about 20%.
Okay, so 20% of every dollar of rent goes to property taxes. So everything that
Correct.
you can do on the property tax side is huge. So Mark, maybe give people a little bit about your background and sort of what your firm does.
Okay, thanks, James. My name is Mark Cantrell, Cantrell McCulloch. We started a firm in 2001 with my brother and Bobby McCulloch. We were former Marcus and Millichap real estate brokers for many years. And we started the property tax business, really started from scratch in 2001. We felt like there was an opportunity to help owners and do things a little differently. We were multifamily guys, backgrounds, and we just kind of built a business from there. Now we represent more apartment properties than anyone by a fairly wide margin in the Dallas-Fort Worth area. We're in about 100 counties in Texas, and we're in several other states.
That's perfect. A lot of people, when COVID-19 hit, they said, well, if renters are not going to have to pay, if we can't evict anybody, do we still have to pay our property taxes? So I don't know if it was the Attorney General or somebody chimed in on this, and what was the response on this?
Well, we tried to see if Section 1135 of the Texas Tax Code, you can see this slide here, if that had any bearing on this current COVID economic debacle here that we've got. And due to the fact that it's not associated with the physical damage, the Attorney General ruled that Section 1135 of the tax code does not exempt properties due to the COVID virus. So that puts us back right where we started, that values are assessed as of January 1. And so the appraisal districts have to follow the tax code. And that's how they are, following the tax code is, values were January 1, here's what the notices are. And so we're trying to see if we can quantify what the damage has been done as far as economically in April and May rent collections. And then we're still going to push the appraisal districts to give us some consideration.
Okay, so the schedule that, I think a lot of these county tax offices have probably been closed like a lot of other businesses. So is this the normal schedule, or have these all been delayed here in terms of when they're going to release these notices to borrowers here, or to investors, I mean?
Yeah, that's a good question. The tax code in Texas, the notice values are typically sent out April 15th, and the notice to file protest, the deadline is May 15th. The tax code also says that you have 30 days from receipt of the notice value. So this year, everybody was a little bit late. You can see Dallas County values are not expected to be out until May 15th, so that's 30 days late. Collin County, same thing, May 15th. Denton County came out today. Tarrant County expected out to tomorrow. You can see Harris, Travis, and Bear, they were closer to the actual normal process, and they got their values out in the middle of April. So the deadline, you got to be a little bit careful this year. Some deadlines are going to be May 15th. And then, of course, Dallas, Collin, Tarrant, Denton, they're going to be 30 days after the mail date. So it's going to be probably June 15th, could be as early as June 1st. So it's a little bit scattered. And so if you got properties in multiple counties, you need to be careful and not miss the deadline to file the protest.
Okay, yeah. Denton and Tarrant County, in the past probably 2 or 3 years have been pretty aggressive, pretty close to purchase price on a lot of deals. Dallas County's lagged a bit here. How, what are you seeing just sort of in terms of this year? How do you forecast these things coming in? And then how, maybe talk about how the counties go about, I mean, obviously they can't appraise and go through every one of these properties, so what's their typical process, and then how do you guys come in and help investors?
Okay, that's another good question. The thing that the appraisal districts, they have to mass protest. And so what they do is they determine what they're going to use for cap rates for certain product types. And so each, in Tarrant County, they'll have a C quality, C minus, C plus, B, or an A quality. And so they determine what cap rates they're going to use for each class of property, the way they class them. And then they use a certain vacancy rate, and then they have an idea of what they want to use for an expense ratio. And so they send out their notice values based on that. They also watch all transactions, the deeds, to see if anything is sold. If that property has had a transaction, you're probably certainly going to be tagged, and they're going to research and try to find the debt amount. And then they're going to guess at the purchase price, and they're going to flag those properties, notify, because they've got to track sales. Their job is to keep up with market value. So when there's a sale, they're going to hit it. We've seen that Tarrant and Denton and Collin too have been very aggressive the last 3 to 4 or 5 years. Dallas has been some aggressive as well, but not as aggressive as these other 3 counties, especially Tarrant. Tarrant's probably the most aggressive major county in the state of Texas. Dallas this year, we've seen our values. They've increased them significantly. They're trying to catch up a little bit on some of their values, and we're expecting some pretty aggressive increases when those officially are released May 15th.
So what can investors do, right? Like, how can they prepare for this? Obviously, it's coming out in the next couple of weeks. What can they do to prepare for this coming up?
Okay, what we're asking our clients is the typical information of the trailing 12 months, the year-end 2019 P&Ls, and either a December or January rent roll. And then this year, what's a little bit different is we're asking them, James, to give us documentation, what collections were received in April, and then when they close out May's books, what collections were received in May, along with rent rolls and year-to-date 2020 P&Ls, so we can try to quantify the effect of COVID. And if we can go show the appraisal district, this is an unusual occurrence, never has happened before. We believe there should be some kind of exemption, some kind of a discount based on the current environment, because really as of January 1, it wasn't known, and it wasn't really in Texas, the virus, but we feel like that there should be some consideration, because going forward, we're going to be impacted.
Right. Okay.
And
then,
it's going to be hard. It's hard to quantify, but we're asking them to give us the information so we can try to quantify, show the appraisal district, see if we can get them to be understanding that there should be some consideration. And then, of course, I always provide all reports of deferred maintenance, photos, any bids, any pictures of the property, anything that could be considered detrimental to the property that sometimes your tax consultant cannot see by driving the property.
is there any examples maybe from last year where these pictures or detrimental items, in when you're in there battling for lower property taxes, was there any stories from that you can remember that you could share?
Yeah, sometimes like we may not be aware when we ask for the clients for information. They sometimes just send us the P&L statements
Sure.
and the rent roll, but we don't know that maybe there was a fire in October, or there was some kind of major issue with the foundations, we had a couple of 3 different properties that had actually had fires that occurred that we found out about through the process. And then that allows us to go back and say, hey, the property as of January 1 was not fully up and running, and it should be some discount due to this fire. So we had 2 or 3 of those situations. We always have many situations where there's some deferred maintenance that we really can't see that could be going on with the property. They may have some water damage, things like that. And the appraisal district, they understand. They give us a credit for that if there's documentation that we can actually show them.
Okay. And then on the COVID, I guess if, let's say, collections were 100,000 a month, and in April or potentially May it drops to 80,000, or you're getting 80% of collections, so then we'd go in and try to get some sort of discount, maybe not a 20% discount, but at least
Exactly.
some sort of discount. Okay, but you're going to have to show them sort of proof of where it was and then what it dropped to because of this whole COVID thing.
Correct.
Okay.
Multifamily is not going to be impacted like big box retail, or retail centers have a lot of restaurants, of course, hotels. Those product types, there's significant economic loss and damage due to this virus. With multifamily, we should see these getting back up and running at some point in time. We just don't know exactly what the effect's going to be. It is going to be an effect for several months, but we just don't know exactly how to quantify it at this point. So that's going to be the big question, is how the appraisal districts are going to look at this information. We're hearing some say, hey, as of January 1, that's the value. And so it's going to be interesting to see how it plays out.
So, I don't know many owners who try to fight the tax consultants or taxing authorities by themselves. Maybe just give us sort of the 30-second, why should they use you guys, and, what's the best way for them to reach out to you to really start this process on somebody's property?
Okay, I understand. When we started the business in 2001, at that point, there was more people that did it themselves. Okay. And I think there are very few owners now actually represent the property themselves. One of the reasons is when they go into negotiate the value or describe what they feel like the value should be, they don't always get to meet with senior appraisers. A lot of times go to appraisers that may not have the authority to do the significant write-downs when it's merited. And so we're able to go in and talk to senior agents, tell them the exact situation, and we know what information they really need to look at to give a hard answer and seek a big reduction. Whereas a lot of times owners get too emotional. They come in, they're a little bit more demanding with the appraisers. It puts each side on defensive. And so it helps to have a really good consultant that's very professional, has a very good working relationship with the district. And I just don't, the fee amount, if you pay a consultant $2,000 or $3,000, $4,000, $5,000, if you look at property taxes, it's such a big number. Every $100,000 in value is about $2,500.
Right.
So if it's a $5 million property, I think it's a no-brainer to have a professional represent you, because I think your net tax liability will be decreased.
That's perfect. Well, what's the best way? Is email, phone? What's the best way for people to reach out if they have additional questions about their property and want to get you guys help on this upcoming season here?
Yeah, just contact us. You can go on to www.cmi-tax.com, mcantrell at cmi-tax.com, and then our number's 214-478-2555. That's the cell. Just pick up the phone and we'll get right back with you.
All right, Mark. Thanks a lot for coming on today. And I know you guys are busy, so I appreciate it.
Thanks, James. Take care.
Thanks.